I'm Tim. I'm responsible for the go-to-market for nCino on the European continent, EMEA.
All right. Tim, we had a really insightful session here in Sweden today where we had a room packed with people from banks and financial institutions. And one of the sessions that created the most engagement was the discussion about build versus buy. Tell us why is this still a discussion that takes place within banks, especially when there's so much functionality available in the market?
Yeah, I think there's traditionally always been the views by banks that they're better served by themselves and that they are very specific compared to their competitors and want to keep control over the development pipeline of their solutions. And also that the procurement processes within those banks is very stiff, and it takes time to onboard new users or new solutions or to onboard new vendors. So that's why those two combined together leads to that a situation where even for commoditized and simple use cases, there's still an appetite for developing internally, really.
Yes, and my name is Gunnar Wijkmark, so I'm working at Accenture and I'm responsible for strategy consulting FS in Sweden, mainly focusing a lot on the dialogues with the bank, but also the insurance companies, where you can do a lot of stuff to differentiate yourself in the market and how you communicate with the clients, how you meet the clients in your risk models. You have a lot of different areas that you could make yourself in a better position compared to other sort of players that are competing with you. But the first step is quite big to go from perhaps where you are today to some which is more automated.
Yeah. Okay. Now you work with lots of clients in the industry. When it comes to the build versus buy decision, what functionalities are banks choosing to buy off the market versus the ones that they're choosing to develop themselves internally?
We just discussed it today also, because it is like that in the market. That some solutions is that given that you should buy, and some solution you normally build. And there's not always a good reasoning behind why it is as it is. It's just more culture and background and where you come from and so on. You should have a long-term focus on this and a long-term strategy and how you sort of behave and how you decide what to do and what not to do. Because the bank they also are responsible for the whole infrastructure, the whole application landscape. So you need to look at that and see how you take the stories forward, so to say.
Now, nCino works with clients all over the world.
Yep.
What are the typical reasons that you hear from banks for why they come to you seeking for a platform that is already modern, that is modular, that is able to adapt new technologies and perhaps make the most out of what's coming down the pipeline?
Yeah. And just to add to that, like, we're a platform among others, right? Like we obviously have our USPs, but we're a platform like another. And one of the main reasons behind that is technical debt is the one that is, at least in Europe, mostly put forward, that a lot of the legacy technology is too stiff and it takes too long to adapt to new market realities. The other is, I wouldn't do an interview with you without talking about AI. I think AI is a good excuse or alibi to set the whole data infrastructure in those banks to modern standards. And currently, when a lot of banks with AI are seeing the end result and what they could achieve, they just find out, or they have found out for a long time, but they just realize that with the current infrastructure, they will not get there. And so then they're looking for faster and maybe more off-the-shelf use cases in what traditionally was built to get to those efficiencies that they're looking for.
When you talk to clients, how is it that they are planning on deploying AI into new modern platforms that could give them a new way of servicing their customers and a new way of approaching credit risk management?
Yeah, so there's on the cost income equation, there's two aspects of that. One is reducing costs, and so finding AI to help you triage a larger set of data, making sure that a lot of those manual processes are automated or taken care of by agents. And the other is quickly identify opportunities to increase market share, to increase the income, and beat competition. So there's a speed aspect of it. There's a market screen aspect of it. There's a adapting the product portfolio to those customers faster than the competition. So AI is really helping at the entrance of the flow and reducing costs by automating a lot of tasks and helping with expanding market share.
Now, one of the perks or one of the benefits we see from modernizing systems is that financial institutions, banks, and other players in the industry can tap into functionality that gives them access to servicing underserved markets. If you have now a modern platform that can aid and that can make better decisions when it comes to credit risk management and also with lending, do you see that as opening new revenue streams and new market segments for banks that have perhaps not been able to service those needs in the past?
Yeah, absolutely, of course. I mean, it's for the larger deals, you always had a time to have a lot of manual work and manual support to make that happen. But for the smaller deals, of course, you need more automated solutions like you have in the private side. So if you look at the corporate side, of course, you could service more clients and handle more clients and discuss with more clients and focus on relationship with the clients. Of course, there's a lot of areas. And also in the corporate sector, I think that there are some segments that the bank don't really have the time and wish to focus on because it is a bit cumbersome to walk through the KYC process, to walk through the whole origination process and so on. So of course, the more efficient you are, you could of course save money, but you could also spend that money in treating your current clients better or attracting new clients in other markets.
Yeah, banks and other financial institutions that are going through a modernization process, they don't want to be stuck in a legacy problem 10, 15 years down the line. How is nCino ensuring that the tools and the systems that you're developing for clients will remain future-proof and will remain adapting to changes that will come further down the pipeline?
Yeah, there's no shortcuts to that. It's all about product investment. And as we have constantly learned throughout the history of our company is being very disciplined in reinvesting in the product and the R&D and sometimes acquiring technology that emerges on the market to complete the set of functions that we provide to the market. That's really it's you can't be followers on this market. You can't do anything otherwise you go back. So it's always going to invest in and be a trendsetter. That's how you stay alive really in this market.
Yes, Accenture, of course, being a strategic partner to many organizations that might be deploying these type of solutions. How do you work together with companies like nCino to be able to help banks through the transformation process? What's within the areas of expertise of Accenture and how do they combine with the capabilities of their suppliers?
Yeah, well, as being consultants, we need to be on the client side and understand the client drivers and perspectives. What are the pain points? What are the targets that goes on a bit more long-term perspective? And that, of course, develops their priorities in how they act today. So if they, and we discussed this in the panels, if they have a need to do really big improvements or a shorter time and period and really see that they need to grow, and to be able to do that, they need to save costs, but also to be more efficient in the processes. Then that's one route you will take, so to say. If it's more, okay, we know where we are, we know where we stand, we need to sort of fine tune some things, we don't want to risk too much, then you make other decisions. So I think that's what we could discuss and help the client with, to find out what are actually the drivers that they have and what are the perspectives in a bit more long-term perspective, not just now, here and now, but how you look over like a 5 to 10 year cycle of time and so on. And that's actually very interesting because within a bank, there's different wills to this and different wishes and different priorities. And that's a very interesting phase to discuss with the client. How can we do this in the best way going forward?
Yeah, absolutely. And now that you discussed the 5 to 10 year horizon, how do you see these modern platforms, specifically the ones for credit risk management and lending, how in your view, how will they evolve and what will become the de facto status quo in 5 years?
Yeah, I mean, first, banks are not the quickest one. It's not like the smallest fintechs just changing everything in a year or something. So it would take time. So 5 years is perhaps too short to make really big changes, but 10 to 15 years, absolutely. But we all know technology evolves really, really quickly. So you need to sort of understand your whole architecture to see where you are today and where you should be. we have the introduction of Gen AI and AI on top of things, and we have new platforms coming in. I think the maturity level of current platforms today in the sort of loan origination is totally different compared to 15 years ago. They were not existing 50 years ago, I would say. So things are happening. That's why as a bank you need to have a somewhat flexible architecture. You could adapt to that and sort of include new applications, new architecture, new type of solutions going forward. That I think is the key thing.
Right.
But the long term, I think, is quite important to understand what are the drivers, what are the priorities. Then you know that you need to change in the short term perspective, but you need to think a bit long term on these things.
Right. Is there any functionality that you're particularly excited about when you look at the either latest functionality that has been deployed on the nCino platform, or when you look at the product roadmap that you think, okay, this when this reach maturity, this is really going to be a game changer?
Yeah, there's a number of, I would say, really bespoke functionalities or let's say niche use case functionalities that that are driven also by customer demand and that I'm quite excited about. We have we call Banker Advisor, which helps the banker make sense of the data that they're importing into nCino and help them structure deals and conduct internal conversations and interrogate credit policies. We have a module that we call the continuous credit monitoring, which will allow for a real-time monitoring of your existing relationships with your customers. That is really event driven and as opposed to calendar reviews or that are part of the past, in our opinion. So those are probably the main two parts where we see a lot of traction and we're very excited about.
Yeah. All right. Well, Tim, always a pleasure catching up with you. Thank you very much for taking the time, and great seeing you here in Sweden.
Yeah, the same.
Thanks.
Same.